Good morning. This is Simon with TrADenPERFORM Coaching. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those that exist in this channel. Past performance of any trading system methodology is not necessarily indicative of future results. Consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So first, let's just go over the overnight. We're trending down since about 3 in the morning, right? I'll keep adjusting the Globex flow, but you can see we came right into where there's that hole in the profile, and it makes sense to bounce out of that, right? Somewhere in here this morning. That'll become a pivot. The only caution is it's in the middle of fair value. So we'll just look for normal setups in there, right? Yesterday's value area low is 19,873.75. We would look for stronger rotations out of that area, and particularly at the top of the single prints and the bottom of the single prints, right? And then overnight, it looks like this is going to be unfair pricing over here, and this will be unfair pricing down here. We'll see where it is when it opens, and we'll finalize that. And the overnight point of control is at 19,990. That's unlikely to change at this point. When we look at the bigger picture, all right, buyers are still in overall control. I covered this the other day, right? If you bring this in far enough, you will see that we just haven't had any damage to the overall process. Obviously, there's structure here. We tested underneath it and have found responsive buyers, and there's more structure down here at 19,280. It's a bull market. This is still the 50-60 retrace starting at roughly 19,665, going all the way back to the 62 retrace roughly at 19,230-ish, let's call it. Okay, in that area, I expect a strong response. I'd be looking to buy calls in that area, assuming everything else sets up with that if I was a swing trader for a push back up to the upside. So now let's move to the important stuff. So I built an algo with the help of Sean and Bill, and that algo, one version of the algo took the trade right here, and another version of that algo took the trade right here. Same algo that was designed to take it with the arrows up, whether they be the pink and purple or the white arrows, right? Or the no supply, no demand, pink and yellow bars. And something very, very interesting happened. Okay, so we started running this yesterday morning with one contract, and with one contract, it has made $515 since yesterday morning. Okay, and it has 15 trades, 12 winners, 3 losers. Okay, which comes up to an 80% win rate. The average loser is $148. The average winner is $80. Okay, so or 4 points. Okay, and you would think, well, wow, that's really messed up. Well, that got me woken up really quick, right? I started looking, well, why is it that we're having that? And there's two reasons. There's 2 reasons for that. So everyone can hear me. Am I clear? The video's good. Okay. So what happened that was very, very interesting was this. Dan, you'll find this interesting, and I discussed this with Randy as well. The cursor is difficult to see. Too small. Well, let me see if I can find a highlighter. Okay. Got it. I know what to do. Okay, hold on. Okay, hold on 1 second here. Oh, here we go. Annotate. There we go. Okay. Can you see this floating on the screen? Is that better? Okay, cool. So here, let me do this. So something very interesting happened. Okay, so you can't use the overnight. You need to be on the 15 tick overnight. So we would be on the, so let me go to yesterday. This is 50 cents. And most of y'all are using the 50 cent, not the 15 cents. So I'm going to go back to yesterday. Yesterday's trading. I'm going to use this downturn as an example, the leading up to it and the going down, right? So if you'll notice, this second bar right here, the second bar after you get the purple arrow down, right? The choices are pink or blue arrows, red arrows. I know they all have different algos, so we're just not throwing it. And white arrows. White and red arrows are the same, just distinguishes. And then the yellow and pink bars, right? So here's what you will notice. Oh, heck, how do I erase the annotate? Well, once I annotate it, it looks like I can't unannotate it. Let's see. More. Let's see. Annotate. How do you erase your annotation? Well, it doesn't let you erase. And if I move the screen, what happens? I was afraid of that. So here, how do I stop that? Hold on 1 second. Are you telling me on the annotate there's no way to... wow, that's great. They gave you an annotate button, but no ability to erase it. Hold on 1 second. Hold on 1 second here. Let me see. Oh, there we go. Let's see if that works. Nope, that doesn't do it. Unbelievable that you can't get rid of your annotation after you've done it. Like, what in the world is the point of that? Okay, hold on. Okay, how do I fix this? Hold on 1 second, guys, and I will fix this. Share. Share. You got to be kidding me. Is that the only way to freaking delete it? That is the only way to delete it. I will highlight it with circle because the conversation is taking too long. Apologies. Okay, So what I'm pointing to is when you get this down, the entry's on this down arrow, okay, right there. Instead of on this bar, it's the second bar. So on the blue bars, right, so that the entry instead of being on the blue bar is on this bar. I'm going to show you why in a second, okay? And what you really want is a no supply, no demand, or an arrow on it, or a combination of both, okay? And I'm going to show you why. What happens is the win rate, so what you're trying to do is get that thing to lift. So you can't just, nothing changes in this trade, right? If you were looking to trade, like obviously no one's going to go long off the turn on this apex when this is showing short, right? No one's going to do that, right? We're looking for 3 waves down or 2 waves down or some kind of setup. Use all your normal setups. So this doesn't change the overall process at all. But what I'm doing is I'm entering here with a 10-point stop. You can even tighten it down to an 8-point stop. I'm using a 10-point stop, okay? This bar right here, the top bar, that stop requires roughly 16 points. The next bar down only requires 8 to 10 points. That's a $160 discount, right? And what you're doing, so this is how I'm managing it. So remember, this first ball goes to 8 points, and I'm still trying to trade this as if I'm trying to get the turn, right? So what I'm doing is if I'm coming down, right, so I'm coming down here, let's say I wanted to trade long, right? I wouldn't have taken this trade, but I probably would have taken this trade right here. Why? Because we're pretty far extended at this point, even though this is still the A wave, right? I enter here. I'm going to scale half my trade on the very next bar up. That's about 4 points, right? Which leaves me somewhere between a 4 and 6 point stop on balance, or I can close the entire trade out at 4 points. Now, for now, this is maintaining between a 70 and 80% win rate, right? But what that does for me, by waiting for the second bar to enter and making sure I have the algo on that, is, let me tell you why this is different, okay? Because everyone's entering here and no one is scaling here because this is 16-point stop. I think everyone will agree with me on that, right? If you enter here, there's no way you're scaling here because the stop is too big and no one's going to go, I'm going to scale for 5 points when my stop is 16 points. But you may consider, if your stop is 8 points, scaling for 4 points and pushing your trailer, right? So as you go through this trade, and it solves the continuation problem, right? If you look, if you can get that on your second bar up, so when you look over here, for continuation, so see how it rolls down and does the head and shoulders? This becomes your entry on the head and shoulders. This becomes your scale. This becomes your push, right? If you're looking for the long or the short, depending on how you're looking, so you don't end up with this, right? You can still take the second bar up on the blue and tighten down your stop. It's still 8 points, right? Blue, just make sure it prints so it doesn't stuff that singular bar, right? So you come with the purple bar. This is your entry. 8 to 10 point stop. 10 max, 8 if you want it like right on the button. And then you're scaling here, leaving stop as is and trying to get the push. So I think y'all will get the idea pretty quickly. Again, enter here, scale here, and push, right? If you got the wrong side of the market, you saw the wrong side of the market. But the difference is if you are, let's pretend there's an algo here. You're not taking a 6 point stop. You've now cut it down to 8 points. It massively changes the mathematical formula for how we get paid, right? Like this is a good example. Everyone's like, but you get stopped instantly here. You get stopped instantly for 8 to 10 versus 16 that you're going to end up with a stop there anyway, right? So I'm going to go down here. 8 to 10 versus 16 that you can get stopped on anyways because no one scaled this. Maybe this up here, but y'all are trying to push for the reversal. 8 to 10, this is where it got, this is 6 in the morning. You can't use it overnight. Sorry. You have to switch to the 15. So now, right, I'm going to go back to Monday to show you what it looked like. I just did a video on this, by the way, so it's the same video, right? So Monday, if I'm over here and all the stops, quick stops occur in the 8:30 a.m. to 8:45 window, right? So if you trade there, you trade there. That's all right. Just know that's where all, and I'd prefer you wait till after 9 o'clock. So if I'm looking to trade, number one, let's say the market, that's 9:15, going to go to 9 o'clock. Okay, I'm looking to trade. Entry, scale, stop, right? If I thought this was a continuation, entry, -8 points, but a hell of a lot better than the 16 points in front of it, right? Again, apex trap, no supply, no demand, 8 to 10 point stop, and you clearly got paid on that. Now, if I'm looking for the long for whatever reason, let's say you thought it was continuation, that's an 8-point stop off a 50-cent chart. It's very good. You're going to use the same tools, right? But better than the 16 prior to it. No trade here. No trade here. No trade here. Long here. You're going to scale the next bar and push. Comes down, 50-60 retrace, enter here. I mean, people will figure out how to get more aggressive on it on their own. They don't need my help with that, right? So this is the most conservative approach I could figure out, right? You're looking for the short, entry here, 8-point stop versus the first bar, which is a 16-point stop. Entry here, scale, you're going to lose about 4 to 5 depending on how you did it on the chart. Entry here, you're going to get your scale, and then depending on how you managed it, you either got the face ripper. This did not tag 10 points back, or you just took it out and moved along, right? So see how this is the big impulse move? I'm not going to short here. Why? No one is. That's an impulse move up. You're actually looking for the long right over here, right? Now, if you go, that's it, that's 3 waves up, and I'm looking for the short, 8-point stop versus 16-point stop, right? Yes, you're going to surrender. If you shorted here versus here, you're going to surrender a few points, but that's going to be in exchange for cutting all your stops. So I want to pause. Hold on a second here. So at any rate, I think what changes the formula significantly here is the stop size. Any questions about that, guys? And the majority of stops take place in the first 30 minutes. No questions about it. That kind of makes sense, right? And then you also want to tie down to, are you getting the dots? No supply, no demand, purple bar on the 24 tick or the pink bar outside the channel, all that good stuff, right? All that good stuff. And where this really helps is actually on the purple bar, the way Randy enters with the purple bar and pink bar. This is actually later on the entry than he is on his. However, once you have that, so remember, once you get that no supply, no demand, you know that a reversal is likely. Like when you're waiting for this, right, and you get the green bar, you know it doesn't disappear. So this rewrites on the first but not the second. Once the second, that stays printed, right? So to me, it makes sense once I have this to attempt to push this after the initial scale, right? So no one should be confused. No one should go back and go, holy shit, this is confusing. All my other setups don't work. No. All I'm arguing is on your setups, right, you will end up with a higher win rate and a smaller stop to win ratio, right? A smaller stop to win ratio if you simply use the second bar as your entry. Like even this bar here, 10 points should cover it. Let's see. Did I get it right? One up. So we'll call it 86 to 76. There's 76.50. 10 points more than covers it. You got your scale and you got your push. This is still 16 points over here on the trap. Okay? Dan, does that make sense to you what I'm saying? You have to think about it to adjust how you're going to measure your entry and your exit. And you will have trades where the market flips 50, 60 points and you got stopped. That will happen. But your ratio of RR should increase pretty damn dramatically. Pretty damn dramatically in my book. Okay? And it's true for the 15 tick as well. Same ratio. Right? Once you get you're looking for it on the down bar, you scale the first, you stop on the close behind the second on that chart, right? And you'll see overnight. Here, I'll show you how it works because I traded it. Here, it went like this. Since 5 a.m. So remember, I was contra trading it to test it, right? Got my scale and done some. I was just coming out pretty quickly. Not the second bar, scale. I was taking 4 points just to test it, right? Paid. No trade, no algo on the second bar. Okay, there's a stop in here somewhere coming up. Paid. Stop, there's the stop. And then it just triggered. So if you took this, right, that pink bar right there, that entry is that entry minus 10 points. So whatever that is, it looks like it's 17. So it would be 07 would be the stop, right? 07 would be the stop on that trade. And I'm looking for 1 bar up. Scale, either take the whole thing at 1 bar up or scale. So I could just scale out right there, right? And then I try to push. My stop is still 10 points. So this is an entry of, let's call it 17, and it went to 21 would be your scale, roughly. You can obviously add in as it pushes back on that chart, right, for a lower stop, or you can wait to see if it'll retrace to get an even smaller RR on the trade. My solution is I enter here, I'll add if it comes back, stop at 10 points, and then that is what will let me get and stay profitable. Okay, so I'll be running that trade, that modification to the trade process today, and that's it. I know the RR is a little skewed there. If you use the other way to do it is just always push for maximum push or stop is the other way to do it. I'm not quite comfortable with that yet. So it's scale, pay for a portion of the stop, and push. And I'll flash that now. It's right before the market. Ed, hit me. While you do that, I'm going to adjust the overnight. Wow, right into the gap. So Globex flow is now the bottom of that gap. And unfair pricing looks like, from overnight looks like this. Giant area actually. No, you did miss. Hold on, I'll explain it to you. So all it is you have your normal setup, right? Nothing changes. Whatever would be your normal criteria, that's what you're looking for, right? Nothing changes about that. The only difference is, so let's say I was looking long here, right? And I would normally go long on that white arrow up, right? I simply want that white arrow to occur on the second bar where no supply, no demand. The only exception to that is the pink and purple arrows. I'll just make sure the second bar prints, and then the stop becomes a max of 10 points on either chart, 15 or the 24. You can probably get away with a 6-point stop on the 15. If the 8-point stop is the tightest stop I would use, I'm going with 10 points, right? But what that does, Ed, in case you missed it, what that does is it cuts your average stop of a 50-cent chart in half, right? So everything else is normal, right? So you are going to have two things happen. You're going to miss some trades because you didn't enter on the bottom bar, and you're going to get some trades that stop out and still go a long way. But the goal is exactly this right here, where you enter at whatever this was, 16, right? And you run it to 32. All you've done is taken some of your risk off, and you're banking on that high win rate, which so far has been floating between 72 and 80% on the algo, right? So if you'll go back and look at your trades, what you'll notice is an abundance of when the second bar prints. So what will change is like on a hard trend down, like this, right, where you're getting slammed to the downside, you end up with an 8-point stop or 10-point stop instead of a 16-point stop, which at the end of the day is obviously huge. You're cutting down 40 to 50% of your stop. And what drove this was Sean and I and Bill wrote an algo. We were testing it, right? And the one that traded off the second bar on the no supply, no demand bar, right? The one that traded off the second bar for entry had a massive win rate, floating at 80%. Now, it's only 2 days worth of testing, but I immediately, and the difference is the one that entered off the first bar was down in the 50, 60 percentile, right? This is all auto, so there's different requirements because it doesn't work in things. It takes everything, right? This machine takes everything. It can't distinguish, right? There's no intelligence behind it. It's just, that's the bar, that's the setup, I'm taking it, right? Doesn't care if it's news, 2 minutes before news, 1 minute after news, it just, boom, fires, okay? So what I'm asking you to do is take your intelligence, right? So like this would be a good example. Oh, that's short, pink down. No, wait till the second bar. If you get this bar, wait till the second bar down before taking this trade, okay? Again, cut the stop in half, give yourself a better chance for extension, do all the normal stuff. And the best way to test this, okay, is go back to your trades that you would normally take, right? Go back to your trades that you would normally take. So let's say I was going to short up here. Okay, let's take this sequence and I'm looking for short. The short thing's firing off, right? So it would work like this. Stop, right? Stop. Scaled and stopped. Paid. Okay, so if you look at that a full, let's call this 10, right? We'll call this, you got one scale off, 4, 10, 6, 3 on half side. So you're down 13 points on these two. One other caveat, you need to break the swing to take this trade. Like, you shouldn't take it inside like this. Some of them work, but the win rate drops off. So break the swing, right? Or the other way to do that, to make it easy on you, 3 bars up, one of the two, right? So you don't get doubly stuffed. And then you end up with this. Now here, right, you're going to take it, and then you're going to go, okay, I got pink bar, no supply, no demand. I have the short indicator on. Now I'm going to try to press it, and that's where you end up getting paid, okay? It should allow you to take more shots. Don't enter on the third bar, always on the second bar. So here's another example, -3, right? You got 3 bars down, so you can enter this. This is -10, you're -13. You enter here, get half off here, then you get paid on balance, the push, right? And then the same deal applies there, right? So all the other things I want, 3 ways down, do I have a purple bar or a pink bar on the no supply, no demand, everything else that you would normally look for. Nothing changes except what we're looking for on the second bar versus the first bar. Is that clear, Ed? Hit me with questions now. This is the time. And then we'll actually practice it here in real time. Like I said, the first half hour is where the most stops are. So my suggestion is you just burn the first half hour. Okay, I would have needed an algo on the second bar, so there's no trade for me. Here you got the algo on the second bar, right? So you can short that 35 or whatever it is against 45, right? That's just how that trade is going to work. That's what you're looking for in terms of, and then you're looking to cover this next bar down, right? Does that make sense? Again, this was your entry at roughly 34, 44 stop, down to 20 already. Okay, if you wanted to short, which I don't, we're already in the hole, that's your entry, 10-point stop, max, scale. So the entry was roughly 31, because the bar can be on, the no supply, no demand can be on the second bar. Stop goes at 41 or less, so it would really be 39 in this case. You're going to scale here, and you're going to make a determination. Obviously, don't want to short in the hole unless you're sure we're going trend day down. So I'm just pointing out for educational purposes as opposed to anything I want to actually trade. So again, had this been the turn, the entry would have been this bar on the 15. I did not take it. Just showing you which bar it is. This bar was a 10-point stop. Right, the entry was roughly 36. The stop was roughly 26. That one obviously you can actually tighten it up to like 27, 28. 8-point stop on for sure. You can use an 8-point stop on the 15. And second bar, scale, entry, scale. Entry was roughly 28. Stop is 38. Again, I'm not bearish, and I'm not trading in the first half hour. So that makes life a little bit easier for me in terms of determining which way I want to trade. and choppity chop chop chop. And that's why you don't short in the hole. Remember yesterday, it just started going and going and going and going. Do not, I implore you, make the assumption that it can't just keep going. It may be frustrating, but it can keep going. Don't short it and keep shorting and reshorting. Remember, this green dot is not official until it prints. We came right out of that yellow zone. And that was the hole that needed to be fixed. This is the volume point of control from yesterday. And the beautiful thing is, no shorts on this extension so far. If you wanted the continuation after the break, you can take these second bars up. Again, they're 1 bar stops. Just did the same thing yesterday. There's just no auction in the U.S. session. We're just re-auctioning for all the way down, all the way up. That's all right. I don't like it, but that's all right. And that's why I encourage people, do not shorten the hole on these things. Do not sit there and keep fighting it. You've got to let it set up. If that prints, it would be a short at 87.50 with a stop at 97.50, right? And then you're looking for this to print. You still need a second bar down on this to get that to actually print, right? So on this bar, if this prints, this 79.25, that's 79.25, stop 89.25, right? So you can get an early start in the 15 tick. Now that this has come, like you'd be short at 92 with an 89.25 stop, right? On this, that's how you'd use both charts to adjust your setup. You obviously have more than the scale off. You could have taken most of your risk off there and moved your stop to essentially break even, right? And still gotten the further extension on that trade. Am I explaining that well, guys? Helping my team members specifically. Dan, is that making sense to you, bud? You're my guy that's pretty quick on the scalping part. That's what I'm asking you. Yeah. It doesn't matter the ones that stop. What matters is the ones that extend, right? Just keeping that nice and tight, and then just using your judgment as to whether you think it's long or short or not long or not short, right? The other way to do it is to take your risk off, put your stop at the high, and just use it to reduce it. But I'm not doing that at all. And Randy, that's a good example for you where the 24 tick doesn't set up, but it does set up over here, right? Where you got the pink bar second from the last. Still gives you a way to trade. That goes with what we discussed yesterday, correct, sir? Performance silicon, I think it's housing starts or something like that. Shazam! This will be the longest that stays pink at 69.50 for the 10-point stop, or the arrow. There you go. And again, this arrow will be a 70 against a 60 stop. Or this 76 against a 66 stop. So that one would have stopped, right, which is fine. It was in the middle of the channel anyways. And that goes under, again, you want it outside the fourth channel, right? So if you're trying to catch continuation, that's why I said wait till after 9:05, 9:10, you get past the news sweep, right? And it tends to work much better. That's my observation. telling you the shorts are very, very difficult right now in a slow market to get this thing to roll down. And all those guys are buying Broadcom and Nvidia. They're just programmed to do it, right? Yesterday it shut off at 12 o'clock. It was just all buy programs all morning long. There's, not much you can do about it. And you're in fair value, so, there's overnight unfair value. I guess we're in prior days unfair value, but even with that, it's just up and up and up, right? And you can sit there and reason it all you want, or they can sit there and drive it against you all they want. It would be nice to get some sell pressure during the U.S. session in the morning so we can set a morning low and ride it up. But look, there's just no one's trying to get out. You can actually visually see that no one's trying to get out of this market, right? For whatever reason, doesn't matter the reason. You just visually see when people are nervous or anxious, it moves fast. It slams down fast, right? So what we need is what we can't get. What everyone wants is a dip down in the U.S. session to get long and ride it up. What are we getting? Breakout and keep running until the afternoon at least. So don't sit there and go, I'm going to short, I'm going to short, I'm going to short. It's got to break down, because it doesn't want to go down right now. I can see that. I'm not saying it won't go down. I can just see right now, this second, there's not a soul in the world that's trying to get out of their trade. Not one. Not one person is trying to go, oh, I need to cover before we test the lows or trace Globex low or any of those things. There's not a soul in the world saying that. Right? Everyone's like, it's going to go take out Globex high. That's what everyone is saying. Look at ES. All night long, downtrend. U.S. session open, a little consolidation, bam, run. Why would you want to fight that? And we've taken out we're above IB high. We've taken out everything from overnight. We're just tracing on up, but the most important factor is no one's trying to get out. That's the most important factor here. No one is going, I've got to sell. Now, when they do, it'll change, right? But right now, everyone is saying, I'm not worried about it. Now, when they all worry about it, it'll fly, right? But you want to be after they fly out of it and show that they're concerned, not beforehand. Right? Because you'll just keep getting smashed to bits, and that sucks. That if you're looking for a short, the arrow down with the no supply, no demand bar, that's your clue. There's your other entry. So if you're going to try it, again, I don't see any sellers, it's roughly 89 against 99. 89 against 99. Is that right? 99 against 09, excuse me. I stand corrected.
So in that sequence, you had stop, paid, if you were shorting, paid. And the long, you had stopped. If you took the second one, you got paid. And again, with the smaller stops, I think it makes it much easier. And I did not short that, just FYI. It's almost too slow for me to trade comfortably. We're kind of in zombie summertime land. There's no pace of trade, guys. There's nothing we can do about it. It's summertime. Some days we'll have it, some days don't. We didn't have any real economics numbers to drive this. Total range is under 30 points on NQ on the rotations. Under 30 points. And again on the short and the long work there. Second bar up, second bar down. Here, Ron, these are my entries. Ron asked if I've been scalping around. So here, I'll show you. Stop, win, stop, win. That's where I got paid. Right there. All just messing around. Nothing in the first half hour. But that was enough. And I should have taken this. I did not. And the doors have opened. Everyone was looking for that IB continuation, got smoked. Again, the entry on the second bar, I'm going to keep reiterating, really helps. Okay, it's exactly what I'm looking for. Okay, entry on that second bar doesn't always work, but it keeps your stop tight and then sets you up for extensions if you get them. In this case, 50 points. That's wave one down, by the way. It isn't overnight unfair pricing. They couldn't make the prior unfair pricing. So like this long is 50 whatever 8 against 48, right? If you're going to take that, you got to keep your stops tight. You got to keep your stops tight. This one's 61 against, right? But see on that, see as soon as it starts to lift, like I know I should be able to get 65 and a quarter out of this from that 58. Okay, I'm not trying to hit massive home runs. Scale 67.50. Half off, now close, flat. 69. That's all I'm doing, right? Over and over again. That's all I'm doing. And then I'm just determining whether I should push the trade or not. That was the A leg down, right? That was the A leg down. So I would expect us to take out the stop down here for the B leg. We may not. I may be totally freaking wrong. It may just V down, V up, right? That's not my business. I want that second and even a third low taken out before I push these trades. So let me give you an example of that. Okay. One. I do not want to start looking for the short on 1. I do on 2, and I want to press on 3, but 3 also has to break. So that's all the way up here, right? So anything past this point, on the third lever up, anything past this point, now I get the green dot, right? So entry, partial scale, stop. So entry, scale, and then either stop or you took it out, right? Entry, partial scale, stop. If you took it, these are on lower highs, so these would have to be considered aggressive. And then finally it takes out the high. This is your entry, and it rolls down. So now that's wave 1. I want 2 and 3. Looks like this. So if you look in the overnight, it would have looked like this. This is where it can trip you up. Wave numero uno. Wave numero dos. Now I'm looking. This is where that problem can come in if you can't detect that there's no rotation on this thing. But even within that, you kept your stops small. 1. Scaled and stopped. Nothing. Either scaled and you took it out and stopped or not, right? Because you can see that it's trending down. Stopped. Scaled and paid. You probably came out break even if you try to work that whole thing all the way down. That's where you have to have the distinction of, hey, they've locked in. If you look at it the other way, off that low, right? So rotation is key. Rotation is everything, right? So I don't start looking till wave 2. So wave 1, I do nothing. Here's wave 2. Now I don't know wave 2 is complete until right here, right? I don't know wave 2 is complete till right here. Certainly after wave 1, if I have the rest of the setup, I can come here, but obviously the stops, I'm lining it up with the stops too. And then obviously I know this is wave 3 and I've broken the last swing, right? 1, 2, I know I'm up. So now I've broken the swing a third time. I can start looking. This would become my entry, right? And then the difficult part to this is I don't get 3 waves down to get the long, so you still have to just juxtaposition that against what your overall read might be, right? So at any rate, that's my 2 cents on that, if that counts for anything. Like, let's say I thought that was the impulse move, and now I'm looking for a break of the swing, right? So now I'm looking for the second bar to set up at that 76 quarter, right? Or a retrace off the 76 quarter on the very next bar to enter, to come back and retest and eventually take out this low for a wave 2, right? I need to break that swing, right? So if I'm going to trade that, right, I'm going to do there. So there, I shorted 76.50 and I'll cover 86.50. It may stop, right? It's all right if it does. Oops, but I shorted the wrong size. I'm adding. So now I'm 80 against 87. And that should stop now. That bar up, and there it goes, it stopped. And that's all right with me, because this bar right here is a 16-point stop, right? This bar is a 16-point stop, right? And in my discussion, right, what am I looking for? I'm trying to get this to take out this. So if you're not comfortable with that idea, right? Longs over shorts, right? Then you're looking for the long. You're looking for the pullback. It's not designed to trade everywhere all the time. But it is designed, instead of handing me the 16-point stop, it hands me a 10-point stop, and I'll take that all day long. That is very survivable for me, right? And it's just slow as hell. Yep, I agree with that 100%. And the traps. I agree. Thank you, Ed. I forgot. You know how I get over focused on the new idea or concept. Anyways, guys on YouTube, thanks for joining. We're going to cut that off now, but so the members can go back and review this morning. And it is slow as hell. Don't overtrade. All right, and take your setups on process. And have a great day, guys. Thank y'all for joining.